Bitcoin did act more as a risk-off asset. A risk-on asset in the market's recent correction. It behaved like the NASDAQ, unlike gold.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Cathie Wood breaks down how monetary policy shapes the economy, dives into market dynamics, and shares bold future predictions. Stick around. This could change how you think about money and markets.
Bitcoin to gold, and again, gold going parabolic did take this ratio down. But you'll notice that it did not break the uptrend that is in place and that we think will remain in place. Bitcoin did act more as a risk-off asset. A risk-on asset in the market's recent correction. It behaved like the NASDAQ, unlike gold. But we believe that it was just correcting to this trend line because the Bitcoin price went up so much more than the gold price last year. So we think that this trend line will continue to move up if we're right that we're moving back into a risk-on environment. Now, why did gold act as risk-off, but Bitcoin not do so? I just described one reason. Bitcoin was way ahead of the gold price, so that is one reason. But I think the other reason is we weren't in a financial collapse, we were like 08, 09, and the banking system was or the counterparty risk in the banking system was not called into question. So we think the flight to safety into gold was more of a, hey, let's readjust and get this back into some kind of trend line. So with that, I hope I've conveyed we're really excited about how the market is beginning to shake off three headwinds: interest rates, convergence or narrowness of the market, and valuation. And we think that we're being set up here for some important surprises to the upside, as many strategists and economists worry that we're heading into a recession. We'll be talking more and more about the productivity-driven recovery that will spell the end of the rolling recession.
What would happen if the world finally learned who Satoshi Nakamoto really is? Edward Farina, CDO of Alpha Lions Academy, stirred up the crypto world with a striking visual on social media. His post showed a big red candle beside the Bitcoin logo, hinting at a crash, and a huge green candle beside XRP, signaling a rally, all triggered by the reveal of Satoshi's identity. At the center stood a mysterious hooded figure labeled Satoshi's Identity Revealed. Farina suggests that if Bitcoin's creator were unmasked, it could shake investor confidence, possibly raising concerns about centralization, legal risks, or hidden motives behind the project's origin. He believes XRP, often seen as more regulatory friendly, could benefit from such uncertainty and attract institutional interest. The crypto community responded with mixed views. Some warned that if Bitcoin crashes, the whole market could follow. Others doubted any serious impact, arguing that identity claims have surfaced before with little real effect. While Farina's post is speculative, it taps into a deep curiosity about Bitcoin's roots, a mystery that continues to stir debate and might one day reshape the market if ever solved.
Economic weakness will hurt the incumbent party. So I think that President Trump the Republican Party will really want to get something through as quickly as possible. So now we're going to go through some of the charts that I present in the letter. And the setup for the letter is the rolling recession that we've been in. Now, many people just don't understand what we're talking about when we say that. But we illustrate that we have been in a rolling recession. And now that we're seeing real GDP turn negative, it did so in the first quarter. We may see much more in the second quarter because we're hearing from a lot of companies during earnings season a little bit of a seizing up in spending behavior, some paralysis, waiting to see what happens with the tariffs and with the budget. So I think we'll hear a lot more talk about recession. And what we tried to show in the letter is while many economists and strategists might be talking about the beginning of a recession, we think that the final two sectors to give way, those that have been holding up the economy for the past 3 years, providing us with positive GDP growth overall and employment growth, importantly, those are capitulating. They are the high-end consumer and government, the first government recession in the last 30 years. The last time we had government contract was during the Clinton administration with Newt Gingrich leading Congress towards more fiscal discipline. And so here we go. Now, one of the reasons we talk about this rolling recession and have been so vocal about it for the last few years is this chart, the Fed funds rate. Now, what you see here in purple is the actual Fed funds rate, the target rate that the Fed has in place.
Bitcoin recently broke out of a tight trading range and hit $97,930, its highest level in 10 weeks, fueled by strong institutional demand and $3.6 billion in spot ETF inflows. Despite this surge, futures traders are still cautious. Data shows the annualized premium on Bitcoin's 2-month futures has stayed between 6% and 7%, signaling neutral sentiment and a lack of high conviction in a push toward $100,000. A big reason for this hesitation is the global economic uncertainty, especially surrounding the ongoing trade tensions between the U.S. and China. Traders worry that even with institutional interest growing, fears of a recession could limit Bitcoin's upside. At the same time, gold has outshone Bitcoin in recent weeks with a 20% rally, overshadowing Bitcoin's smaller gains and putting pressure on its digital gold narrative. Even so, Bitcoin options data shows a shift in sentiment. Whales and market makers are now pricing in more upside, reversing the bearish tone from just weeks ago. While traders remain cautious with leverage, this conservative positioning could set the stage for a sudden breakout. As long as geopolitical tensions continue, Bitcoin's fate will likely stay tied to broader market trends. But the potential for a sharp rally remains on the table. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.